Alright guys, so this is day 6, and in this video we are going to talk about choosing the right market to trade on. We're also going to go over what platform, what broker, what prop firm you should use if you want to go along and continue down the route of Forex or futures. I personally trade futures as I mentioned, but you can still choose to trade Forex. Now, before we go into that, let me talk about what markets you should trade. So the first thing to note here is that there are, as I said in the first video, there are different markets. There's crypto, there's stocks, there's Forex, there's futures. But today I'm just going to go over the three main ones, which are stocks, Forex, and futures. Explain to them how they work, explain to you guys how it works. And in the end, I'll explain why I chose futures. Okay, all these three options, I have tried them, and futures has been the most profitable, efficient, and actually just the one that I enjoy doing the most. Now, this is what I'm going to teach in all of my videos, but I just want still to give you an opportunity to consider any other options that would be available to you. All right, so what market should you trade? So there are three major trading markets people usually start with. There's stocks, Forex, also known as foreign exchange, and futures. And each of them have pros and cons. So I wrote everything here. I broke everything down. And now let's talk about each and one of them's features. So if we look at the comparison between stocks, Forex, and futures, we can see that here in stocks, the asset that is being traded is a company's shares, right? So if we talk about Tesla and you would decide to invest in Tesla, you are essentially buying shares off of a company. All right, when it comes to Forex, you're buying a pair, you're buying a currency. So as I showed in the first few videos, if you decide to trade on USD CAD, let me just pull out the chart here. Let me just do that for you guys. If you decide to trade on USD CAD, let me go ahead and pull that out. USD CAD. Oops, I think I clicked on the wrong one. If you decide to trade on USD CAD, you're essentially buying USD currency and seeing how it fluctuates with the Canadian currency. So as you can see, $1 USD would cost $1.37 Canadian. So this is what you trade on when you trade Forex. All right. And when it comes to futures, you are trading what's called indexes, commodities. So this is when we talk about. There's also gold, which is just a mineral, which is just a metal, to be more precise. But when we talk about indexes, we're talking about S&P, we're talking about Nasdaq, which is essentially what I trade. So, there's corn. I know I mentioned corn last time, but these are all the things you can trade on futures. Now, in terms of the hours, they're pretty similar, with the only difference that stocks are open only from 9:30 to 4 p.m. and Forex and futures are pretty much all throughout the week, 5 days a week, 24 hours a day. Now, futures does have a little break of an hour between 5 p.m. and 6 p.m. EST. So, apart from that, Forex and futures are very, very similar when it comes to time and when it comes to the markets themselves as well, the way they function, which is why I think if you would have to choose, I rather want you guys to choose between Forex and futures. Stocks are good, but they're very, very, in order for you to make money from stocks, you would need to have a lot of money in the first place. All right. Now, the good thing about stocks, though, is that they are highly regulated. So what does that mean? Being regulated means that it is very, very hard to, one, manipulate the market. I'll explain that. Actually, let me explain it right now. So when we talk about market manipulation or price manipulation, think about it as this. When there's a lot of stories, by the way, about some stocks where people manipulated price, and they, for example, created a company, and they all of a sudden decide to invest a chunk of money, like millions of dollars, into a company in order to make the price go up. And we've actually seen it with stocks like GameStop, where a lot of people decided to invest all at once into GameStop, making the stock skyrocket, which is essentially called market manipulation, which is why they shut down the stock after a while. And then, the price dropped. It made a lot of people a lot of money, but this is just an unregulated movement. It is not controlled, which is why they closed the stock. They shut it down for a couple of hours. I think it was a couple of days actually. All right. Now, Forex is often unregulated and not in the price movement, but in terms of the brokers. What we'll talk about with brokers is that brokers are basically, like as I said in the previous video, they're companies that allow you to trade on their platform, and look at their charts, and they give you, they show you the price, and they give you options such as leverage, which we'll go over, which basically allows you to trade huge amounts of money with low amounts of capital. And now, oftentimes, unregulated brokers will offer insane leverages, and they're often also going to manipulate the price and the charts that you see on your screen. It might seem like it's the real movement, but being unregulated, they're not allowed to do it, but they do sometimes manipulate the price in order for you to lose money. All right. So this is one of the risks when it comes to trading Forex. Now, futures is quite regulated. It's actually really regulated, because it's controlled. It's regulated by the CME, and there's different exchanges, and the way it processes the data in order to give different prices on the chart is extremely, extremely watched. So, all in all, I think that in terms of security, while trading stocks and futures are the best options, but obviously, as I said, I think today you would mostly have to choose between Forex and futures. So in this case, for that, you would choose futures. Now, when it comes to the starting balance you should have, the capital you would need in order to do day trading, in order to make money every single day and live off of it, for stocks, it's pretty high. You would need at least $25,000 to trade, because there are no such thing as prop firms for stocks. There's no such thing as institutions that give you capital. You have to trade with your own money. So $25,000. If you have that in hand, hey, listen, big ups. You could always start and see how stocks do for you. These are long-term investments, as I mentioned as well. Mostly long-term investments, as I mentioned as well in the previous video. But you have better options such as Forex and futures, where you can start with Forex with between $150 and $500 just by getting yourself a prop firm. The same thing goes for futures, where it ranges between $500 to $3,000 depending on if you want to use a prop firm or your own capital. All right. Now, in terms of leverage, as I mentioned, stocks basically use little to no leverage when you trade. So the money that you put in is the money that you get. Whereas Forex and futures, for example, have a leverage of often 1 to 100, which is the most common leverage that you guys will see. So $1 that you put into the market, $1 that you have in your account would equate to $100 in the market. So if you were to have $1,000, well, you would essentially have $100,000 in the market, right? So the more money you have, the more profits you can make. All right, which is the reason why you can start with such a low capital, because of that leverage. Now, stocks are very news heavy, and you have to check the earnings of the companies, you have to check the news, you have to check the employment rates, you have to check if they have any new releases. If we're talking about Tesla, if we're talking about Apple, if they have a new Apple device that's coming out that's revolutionary, of course the market is going to go up. Whereas Forex is more news reactive, because we're talking about the difference of prices between currencies. So there's obviously a little bit of price action, so a little bit of analysis in the price movement. I'm going to talk about it in a future video. Actually, in the next video, we're going to talk about key levels, liquidity levels, where people are expected to buy, where people are expected to sell. But it is very more so news reactive. Futures, on the other hand, are very much more about structure, there's a lot more about liquidity. So when there's a lot of people trading at once, and it is also based off of news. So in terms of strategy needed, when you trade stocks, you want to look at the earnings, as I said, and you want to look at the charts. There's a little bit of chart movement that you have to look at. When it comes to Forex, you have to be looking at the news. You have to be looking at the price action. You have to be looking at a little bit of structure as well. Whereas when it comes to futures, you could technically trade without looking at the news, but I still do so myself, which I would highly recommend, and which is what I'm going to teach in my future videos. But it is highly needed that you rely yourself on news, price action, and structure. All right. So, all in all, I think the best option for you guys would be futures, just because it is regulated and the starting cost is pretty low for an amazing return, by the way. All right. So why did I choose to focus on S&P and NASDAQ? So these are the markets that I trade on. So the S&P is basically a contract that tracks the performance of the S&P 500. I said S&P, but the ES. When we talk about ES, it is a contract that tracks the performance of the S&P 500. When we talk about NQ, so NASDAQ, it is a contract that NQ tracks the performance of the S&P 500 index as well. All right, so when we talk about the S&P 500, what does it mean? It's just the top 500 companies in the US. So we're talking about Tesla again, Microsoft, Google. All these big companies are all included in the S&P 500. So it is one of the most liquid markets in the world. So if you guys remember when I talked about liquidity, there's high profit possibilities. Like, opportunities are crazy in these markets. The volatility is insane. It is highly technical, so it moves in patterns, and it's extremely responsive during New York session. So we are in New York session right now. So it starts at 9:30 and it ends at 11:30. Let me actually show you guys a chart because I am currently in a trade as we speak. And I'm going to show you guys what it looks. Oh, looks like I already hit the TP here. Apologies, guys. My grandmother came in on me in the room while I was talking about liquidity. But when I talk about liquidity, so the market again is very responsive during New York session, which starts at 9:30. As you can see, the market is moving really fast right now. As you can see, there's a lot of movement on the right. If I go to the 1 minute, you guys will see that the charts are moving quick. It's going down, it's going up, it's going down, it's going up. I'm honestly done here for today. I've had this trade since last night, and we already hit $4,000 on 2 accounts. So $8,000 for the day. So the markets are very profitable here. This is like an insane opportunity to make bread. Okay, so all in all, this is why I recommend trading the futures. All right, so and it's perfect for building repeatable strategies. So let me actually explain what strategy I use here for this specific trade. So essentially, yesterday when the market opened, it opened with a gap. I'll explain that eventually, but the market opened with a gap here. You can see there's a jump in price here, right? So essentially, with that jump in price, let me just where's the brush here? Where's the brush? So there's a hole right here that was created, and this hole cannot stay void. There cannot be any void in the price. So I waited for price to reach lower. I waited for price to reach what's called a key level here, or a liquidity area, and I waited for rejection, for confirmation, then entered for buys in order for us to fill in that void, which is why I had my profit target all the way at the top. Easiest flipping bag, bro. I'm not gonna lie, easiest bag. So really simple. It's very repeatable as for a strategy. If I go back in time, I promise you guys will see this multiple times. It's going to happen multiple times over. Let me just see if I can find another gap. Oftentimes gaps happen between weeks. So here we go. The market opens here, and there's a gap, and price decides to go all the way down here for some reason, And all you literally had to do was wait for the next candlestick, enter for some buys in order to fill up that gap, which ends up getting filled. Easy, repeatable strategy, right? So, with that being said, I know you guys, I showed a little bit of my profits here, which is probably going to make you guys want to start like yesterday. But honestly, take your time. We will get to that. You're not missing out on anything. There is opportunity every single day of the week. Tomorrow will not be any different from next month. All right? So, if you want to choose, now let's talk about choosing the right broker and the right prop firm. So, as you can see, guys, I am using the prop firm called TopStep, where you can see it on the top left. I'm using TopStep as my prop firm. So, there are two main ways for you to start trading. It's either you use options. The option one, sorry, would be using prop firms, so funded accounts. So you don't need to have your own capital. You trade with the institutions, well, the prop firm's money. So essentially, you have to pass a challenge to prove that you're consistent. Usually, it's a challenge for $50,000. It ranges between $50,000 and $150,000. And you have to pass a challenge where you have to make a certain amount of money in a certain period of time without losing a certain amount of money. There's like basically a bunch of rules, which is actually going to be your assignment. I want you to look over the prop firm's TopStep and My Funded Futures and look at their rules, okay? But essentially, you have to pass that exam for which you have to pay for, and then once you pass the exam, you have to pay for an activation fee, and then you get funded, and whatever amount of money you make out of your trading belongs to you. Actually, it's a 90% profit split, so you basically keep 90% of the profits you make. All right, so the examples, there are multiple prop firms out there, but I honestly only recommend two. I know a lot of you guys that probably trade already would recommend using Apex Trader or My Funded Pips or whatever. But in terms of payouts, sometimes they have delays and like there's excuses and like they have different ways of processing and different rules as well. So I would honestly only recommend TopStep. But if you want to have another option, I would say My Funded Futures. Okay? Now, I know there's other options like Earn to Trade, Lilu, Apex Trader, E8 Markets when you go to Forex, FTMO. FTMO is very, very good if you use Forex. But honestly, just stick to TopStep and My Funded Futures. Now, the pros of using prop firms is the low upfront cost. As I said, it only costs between $100 to $200 to get an account. So you can use also large capital without risking any of your own capital. Essentially, the only capital you're risking is the $100 to $200 you put in the first place to pass the exam. If you bust the account, if you lose $10,000 in a day, they're not gonna chase you down. This is not the FBI. This is just a simulated account that they give you to see if you know how to trade. And if you bust it, that's it. You only lost the $200 you put in to get the exam in the first place. You're not risking anything else, okay? And there's no restrictions when it comes to the amount of tries you can have. It's not you pass an exam once and you have to wait 30 days in order to get another one. You can do it as many times as you want. Obviously, you don't want to make this. You don't want this to be the start of a gambling addiction where you just buy accounts and hope for the best and hope you get funded within 2 days. You have to have a certain strategy. Now, the cons of using prop firms is that you must follow strict rules. You know, there's a drawdown limit, so the drawdown meaning the amount of money you can lose in a single day. There's a maximum loss limit, so you can't lose, like I said again, a certain amount in a single day. And, you know, payouts take time sometimes. It's not instant. So for me, TopStep and My Funded Futures do it actually really quickly. I often get payouts the same day I request them. But in other prop firms like Apex, it might take a week. It might take 2 to 3 days. Sometimes they might take a month because they'll find an excuse not to pay you out. And you do not want that, okay? You want to have a prop firm that pays out and that has, you know, respectable rules. And that's it, which is why I recommend TopStep and My Funded Futures. You do not want to be their little pet and waste your money on a bad prop firm. All right, and the only con I could add to that is that you don't own the account. So $100,000 does not belong to you. It's the amount that you make with $100,000 that belongs to you. All right. Now the second option I could suggest here is using a direct broker, which would be using your own capital. Now, obviously, you would have to have a lot of capital, but you could open a futures trading account using your own funds. So what I'd recommend here again is NinjaTrader. It's great for ES if you want to trade S&P 500, or you could trade with Tradeovate, which is also a great option. Now, the pros of having your own capital, which is essentially what I'm getting to for myself personally, is that you have total control on your trading. Keep 100% of the profits. There are no rules to follow. I could decide to lose $100,000 in a single day if I wanted to, and no one would stop me from it. There are no rules to follow, and I keep 100% of the profits. Now, a 90% profit split is really, really good with Top Step. This is what I currently have. So I get to keep 90% of my profits, and they take 10%. It is honestly still insanely great. But obviously, 100%, I would love to keep 100% of my profits. Now, the cons is that you need at least $500 to $5,000 to start trading, and that's in U.S. currency. So that would be about, let's say, $7,000, $6,000 to do this for a living, and even then you would probably get only around $100 to $200 a day, realistically, with that kind of capital. If you really want to make actual money, I'd say $25,000, just like stocks. This would be a great start in order to trade with your own capital. All right. And the only thing as well I could add as a con for using your own capital is that there's higher risk because there are no rules. And if you're not consistent in your trading, if you don't respect any of the rules that I mentioned yesterday as to why traders fail, if you're revenge trading, if you have the fear of missing out, if you have all of these flaws, you will lose your money really, really quickly. Okay? So this is what prop firms are actually good at, is they add these rules, which essentially stops you from losing so much money in a single day or in a single trade. All right. So here are the tools you will need to trade. So here are the tools you'll need in order to trade. So these are non-negotiables, by the way. So you get set up properly before placing real money at risk. I want you to look at trading platforms like TradingView, NinjaTrader, Sierra Charts, and you will also need to choose between a broker and a prop firm. I think, honestly, if you just got started, if you have a low amount of capital, that you should only use prop firms. You can make a huge amount of money with a very low initial deposit. Okay? Now, I also want you, as I said in the previous videos, to journal. I want you to write down why you took certain trades, how you felt during these trades, why did the trade not work out in your opinion, what did you notice while you traded, and in the end, if you could ask yourself, listen, I'm new to trading and I need a low risk way to learn, I would recommend you to trade with futures on a demo account, as I explained in the video from yesterday. Okay? And because ask yourself, do you really have savings to use for like your own capital trading? Is it really smart to use your own capital, money you worked for, in order to trade? Or do you want to have a long-term career path? Do you want to build with funded accounts and scale slowly and eventually go full-time like I'm doing right now? Or do you want to start with your own capital, start really, really small, and make small amounts of profits? It might take years for you to actually be consistent enough to make this for a living, right? So I really want you to think of all of these questions before anything. Anyways, for now, it's been less than a week, so you guys are going to use simulations and practice accounts like I explained them yesterday. But in the future, you have to keep these questions in mind. What do you want to trade and how do you want to trade it? Okay? Now, what does the Bible say about all of this? So today we're going to go with Luke 14:28, in which it says, "For which of you, desiring to build a tower, does not first sit down and count the cost?" That's deep. So, just like anything in life, actually, trading success. So having success in trading starts with wise preparation. You don't rush into the market. Don't rush into getting prop firms. Don't rush into using your own funds. Choose your tools carefully. Okay, build your foundation, build a strategy, build confidence when you trade on practice, and to see that you're actually confident and comfortable with trading. And choose your tools carefully. Okay, build your foundation. Let God lead, not your emotions. God leads you, not your emotions. All right? So, all in all, this is it for the day 6. The assignment I would give to you guys is to actually do some research. Okay, do some research on the prop firm specifically. Right on the internet, Top Step, My Fund of Futures, and compare their rules, compare their costs, compare and look at what it looks like when you trade with them. So how much can you lose in a single day? How much can you lose in a single, on the whole account? What's the profit you have to make in order to get funded, in order to pass the exam? Actually look it up. You'll be surprised. What's the success rate of these people taking prop firm accounts? I'm pretty sure it's 90% of traders fail their exam, and only 2 to 5% get paid. So if you manage to get paid on a prop firm account, I can promise you you're part of the 1% of traders that actually are profitable. So, anywho, look up on the internet Top Step, Apex, My Fund of Futures. Look it up, and you can also watch some YouTube videos. There's a lot of YouTube videos that explain any of these prop firms. And I want you to go ahead, if you haven't done it from yesterday's video, I want you to go ahead and download TradingView, and start a demo account. If you do not know how to open a demo account, go ahead and watch yesterday's video in which I explained how to do so. But I want you to go ahead and open a demo account. And yeah, that's it, honestly. And in tomorrow's video, we will go about understanding the candlesticks, understanding the market structure, key levels, and this will really get you started in it will really get you started into taking some conscious trades and strategies. This is going to be the start of something really, really fun, and this is where you're going to see yourself understanding more how the markets move. All right, guys, so I hope you guys enjoyed the video, and I'll see you guys tomorrow for all of that. All right, peace.